Welcome to Sectors Up Close. I'm Elena Casas. Our topic today is luxury retail, and my guest is Javier González Lastra, a portfolio manager from Tema. Unlike the rest of the market, European luxury retail has had a bumper year. The stock's Europe Luxury Index is up 42% in the past year. Much of that is driven by Europe's biggest company, LVMH. That €420 billion giant also gained the same amount over the past year. Much of that is due to the ending of lockdown in China. LVMH alone sold €24 billion worth of stock in Asia ex-Japan last year. So when China's economy reopened, many companies that are heavily dependent on Chinese sales saw a rebound. But recent data shows China's economy is wobbling. So what's the outlook for the sector? My guest today has just launched an actively managed ETF called Lux, which focuses on the sector. These are the top 10 holdings. Unsurprisingly, LVMH is the largest. It also includes drinks maker Pernod Ricard, as well as Ferrari, Mercedes and Estee Lauder. He's Javier González Lastra of Tema, and he joins me now. Javier, hi. Thank you for joining us. To start with then, this sector has already seen a big run-up over the last year. Isn't it a bit late to be launching an ETF specialising in this?
Well, there's a lot of forces at play in the short term, right? We got the US, where we've seen a relatively difficult trading environment, especially because there's been quite a lot of destocking in the wholesale channel for these companies. At the same time, we have the reopening of China, which obviously is a big boost for earnings in the sector. The sector came from a very difficult 2022, where both in China and elsewhere around the world, in the travel retail channel, there were very difficult conditions, and share prices went to reflect that. With the announcement of the recovery of China, clearly the sector reacted, and we've had so far very good returns year to date for the space, as you point out. The purpose of our fund really is long-term. We are trying to tap into megatrends, and we think there are very interesting megatrends here in the luxury space.
But how much should investors in this sector be worried about these companies' dependence on China? Because you've kept mentioning that market. We know that it's huge, but there seems to be a slowdown, or at least a struggle to recover going on in the Chinese economy, which means that these aspirational young consumers are going to have less spending money.
Absolutely. I mean, there's a lot of volatility right now in the statistics, and it's true that some of them are showing some concerns or making people concerned about the speed of the recovery. From a pure luxury point of view, that's not really evident yet. We are actually coming from a low base. Comparatives from last year are actually quite easy in the second quarter. We're seeing the Chinese consumers starting very slowly to travel, and that's going to be a very important driver for the space. But yes, obviously, if the Chinese economy reaches a difficult point in terms of economic growth, the space will be eventually impacted. I don't think it's that clear yet that is the case.
Let's talk about individual companies. LVMH in particular is driving a lot of the growth in this sector. It seems to be outpacing a lot of rivals, including its traditional rival Kering. What is LVMH doing so much better than other companies?
I think LVMH has a very good track record in terms of execution, and some of the big competitors have had unfortunate episodes of unfortunate advertising and issues that have set them back. LVMH hasn't suffered from that, and their execution has continued to be flawless, which has allowed them to outperform. We think that execution is not just a matter of 2 or 3 years. They've had a very, very solid execution, I would say, for the last 10, 15 or 20 years. So that we would expect to continue. As we said earlier, obviously, they are still subject to economic conditions, but from an execution point of view, they've really been outperforming.
There are some weaker spots, though, aren't there, in this sector? Kering, obviously, despite owning big names like Gucci, just hasn't seen the same rate of sales. Why not?
Well, as I've mentioned in my previous comment, there's been some unfortunate events that have set them back. They have a new creative director that is launching this new collection later in September, and that will definitely change, has the potential to change things. But obviously, we'll have to wait until then to see.
Are there any companies in this space that you think are undervalued, that have more space to grow, even if we're going into a recession, if they've got these high net worth customers that are resistant to that?
Well, generally, we think, as I said, we have launched this fund because we believe strongly on the secular trend that exists in luxury globally. Obviously, we're going to enter into cyclical periods where this will not be easy, but generally we think the structural trends are there set in place. So from that perspective, we think the sector overall, when you look at the individual stocks, there are some stocks that may be trading above the historical averages in terms of multiples. There's some stocks that are below, but generally the sector, if you look at it as a group, the sector is trading just about historical averages or below. And we wrote a piece on this. Extending or going into detail around the historical valuations and what has driven share prices in recent years. So we think that the outlook is still, at least in the long term, very attractive in the space.
Javier González Lastra, Portfolio Manager at Tema, thanks so much for joining us. And that was our look at the European luxury sector. I'm Elena Casas, and this is Reuters.